Hi, Steve Sosnick here with today's midday market update for Thursday, June 25th, 2020. Markets are meandering. I can come up with a huge alliteration. Markets meander meaninglessly. I don't know. But what happened was it looked like we were going to sell off a bit this morning. The jobless claims, the weekly jobless claims continued to grow at this was another 1.5 million jobless people filing jobless claims. A lot of them seem to come from states that are having coronavirus troubles. It doesn't bode well, and already having sold off yesterday, the sell-off yesterday was, I think it was more COVID worries than election worries, though some people tried to say it was election worries. Quite frankly, both of these were known. I think the extent of the COVID problem was less well known than the extent of Biden's lead over Trump in the polls. I think the difference yesterday was there was a New York Times poll that showed Biden with a very large lead over President Trump. On the other hand, it wasn't all that much different than the polls that came out a couple of days ago. I think it was 14 points versus 12, that kind of thing. Either way, that shouldn't have been as big. That shouldn't have been the market catalyst. I think the bigger market catalyst was we're either having a second wave of COVID or we're not done with the first wave, and neither one is a particularly good prospect. So that to me is more the bigger worry. One of the things that seems to be holding up, though, is NASDAQ continues to outperform S&P. Now, we understand that there's a big overlap. The top stocks that make up about 50% of the NDX index or make up about 25% of SPX. So they really are sort of tied at the hip to a certain extent. But NDX, those stocks, those market leaders, and I've written about this and talked about it quite a bit, continue to be viewed as the safe haven play. And yesterday, even so, when the markets sold off dramatically, NDX was outperforming SPX. Today, there's nothing to be drawn from this. It's more or less meaningless right now because everything's around unchanged. So if one's outperforming the other, there's not a ton of data to be read into this. But I went back and looked and saw how many times on a down day has SPX outperformed NDX. And I put something out on Twitter. I hope to have something a bit more definitive out for you on our website today. But this is, as of now, I mean, depending on where we close today, as of yesterday, it had only happened once this month, and that was about 3 weeks ago. It had only happened about 4 times in May. 3 times in May and 4 times in April, I believe. I don't have the number in front of me. Bottom line is, that is the kind of thing that gives people confidence that NDX is the safer haven as opposed to SPX. You know, the data doesn't lie. If you have something that outperforms on a down day, and by the way, it outperforms plenty on up days too, but if you have something that outperforms more or less on up days and down days, of course, why wouldn't you see more money flowing into it? To me, then, the big worry becomes, is there a trigger that causes that to reverse? I don't know what it is. Today, actually, we have been seeing some relative outperformance from SPX. The reason for the market's rebound off the lows and starting to move a bit higher was some story that came out. It originally, I think, hit on Bloomberg, that there would be some relaxed banking rules. I'm not going to get into the specifics of it. You should read up on it on your own. It's fairly technical. But bottom line is, anytime there's less banking regulation, bank stocks tend to like that. And especially with the stress test results coming out in the next, starting to come out today, really. This is the sort of thing that bank investors like to see. Banks. The less capital that banks have to tie up, the less regulatory red tape that banks have to deal with, the more that investors in those stocks like them. And that was enough to get the market off its lows today because the big banks are, ultimately, I can't see the market really rallying without big banks participating. So if you have a good day for big banks, that's going to likely be a good day for the markets, or at least not a bad day for the markets. Where do we go from here? Not sure, really. We start to have a Russell rebalancing tomorrow, which is very important, but it's not necessarily big for the market as a whole. It's big in wide range of individual names. I've read some places, there was an article on CNBC.com about how pension funds have an incentive to take some money out of the stock market because it's so outperformed. I get it, and that they may want to rebalance into the quarter. I get the idea of rebalancing. I also wonder how much that has an effect, because I remember in 1987, one of the causes for the stock market crash, it actually started to occur a few days before, was there were big asset allocators, and it wasn't as easy to do this then, so it had to be done over the course of days. There were big asset allocators, state pension funds, who said, wait a minute, the stock market's very highly valued and interest rates are really high. We should start moving money from stocks into bonds. Those who did it really made out well for their portfolios, and that was the sort of trigger that got the market, that got the stock market moving downward. Bonds rallied as a result because the Fed put in a lot of liquidity even then. But as of now, I hate to use that there is no alternative, but if you're a pension fund, and depending what your mandates are, you're not earning any interest anywhere, certainly nowhere close to your mandate. So I have to wonder how much of a factor that would be. I do think that one would be taking some profits into something like this, but I don't know how much you could do that on a grand scale that a pension fund needs to do, and how much we're going to see of end of quarter window dressing, because we are heading into the end of the quarter next week. So lot of little things to look at on a day where there's not that much going on the surface. Have a good one, everybody.